Welcome to Power Lunch alongside Contessa Brewer. I'm John Fort, and coming up, markets struggling into year end, continuing Friday's declines, tech showing some signs of weakness for the first time in a while. We will discuss with Hayman Capital Management's Kyle Bass next.
Plus, an under-the-radar winner, small cap struggling over the past month, but this sports betting play is up on the month and up almost 60% for the year.
And finally, we'll get to the latest on that deadly and tragic plane crash in South Korea. The country's acting president ordering an inspection of all 737-800 planes.
First, let's begin with the volatility we've been seeing over the past few sessions. And Mike Santoli is here to lay out the market setup as we head into 2025. It always feels a little bit like a letdown when you're heading into the new year on this note, Mike.
Yeah, for sure, Contessa. And of course, it goes contrary to the historical patterns, which suggest general tailwinds going into the last several days of a trading year. What we did see this morning, though, interestingly, was a big flurry of selling in the pre-market, and it carried over into the morning session. But we have found some traction. So the question here is whether the market's just a little bit unsettled after that waning momentum we saw going into the end of last week, or if there's some larger message here. What I find interesting, John mentioned tech stocks actually came under some pressure for the first time in a while. Look at the NASDAQ 100 relative to the median S&P stock. That's the equal-weighted S&P 500. So you see, since the spring, you had the NASDAQ 100 with massive outperformance, but the average stock was really making a comeback, trying to catch up to those mega-cap growth stocks, and that has succumbed. So the cyclical parts of this market have not been able to deal very easily with rising treasury yields at a time when economic momentum perhaps has stalled out just a little bit. I do find it interesting, and maybe a slight hint that there was just a rebalancing trade out of equities and into fixed income given that rise in yields. If you take a look at the performance so far this quarter of the S&P 500 against the bond market aggregate ETF, that's the AG right there. You see, that's a very wide performance spread. So if you are an asset allocator and you care about rebalancing among asset classes, you would naturally be a buyer of bonds and a net seller of equities to take profits. Not sure if that's the whole story, but that definitely was the backdrop heading into today.
All right, Mike, thanks. And now let's bring in a power player who famously predicted the subprime mortgage crisis to see what he's looking for in the markets in 2025. Joining us now is Kyle Bass. He's founder and CIO of Hayman Capital Management. Kyle, good to see you. So broadly, look at U.S. but global markets. What are the major themes that you expect to be most impactful in 25?
Yeah, I mean, John, I look at the world a little bit differently and think about equity indices performance. But I think when you look at the financial architecture of the world, the inflation that the U.S. just pushed to the world from, call it 2021 to 2023, had a real negative effect on all of the global economies outside of ours. So we know how we're struggling here to make ends meet. Given 40-50% inflation across the U.S. board. In emerging markets, things are worse. And so when you see, again, the financial architecture of the emerging markets, I haven't seen it this bad since 98 and even earlier. So I think that you want to focus on staying invested in the United States tech arena specifically. And something that's really, I think, going to emerge as a theme over the next couple of years is you're going to see U.S. digital manufacturing. What Musk is doing with Tesla and SpaceX and the way that they are manufacturing a lot of these parts and very specific industrial items, I think you're going to see a resurgence in U.S. industrial manufacturing from the digital perspective, like 3D printing, things like that. So I'm very bullish on the U.S., and I'd be very wary to be spreading your capital across the world today, given the ground war in Europe, the fight between Israel and Iran, and a potential fight between China and Taiwan coming in the next.
So given that, do tariffs protect U.S. exceptionalism, or do they make the whole global situation more tenuous?
Yeah, I think this is an important debate to have. We are no longer running a massive surplus like we did going into the Smoot-Hawley tariffs. We're no longer attached to the gold standard, and this isn't the U.S. Pre-Smoot-Hawley. We are a massive trade deficit running country where we have the global store of value and the hegemonic currency. I actually think that tariffs now will act in a very different way than they acted in the past. And again, when you think about the rationale for tariffs, if you just think about the last time Trump engaged in tariffs, specifically on steel and aluminum, and if you remember, Biden ran on a platform saying he'll immediately unwind those tariffs, and he never did. The reason he didn't is because China specifically is a state actor, and a state actor that is, let's just say, not one of our friends. And they can act uneconomically to put some of our industries out of business if that's what they decide to do. They can act in non-market terms. So when they start dumping steel or aluminum because they want to be the global, let's say, manufacturer of steel and aluminum, and they want us to rely on them for those things, this has to be something that the new president coming in must be thinking about tariffs from both a national security perspective and from a global trade perspective. So I think you're going to see tariffs act more positively this time than they have in the past.
Given your view of China and how outspoken you've been about TikTok, what do you make of President-elect Donald Trump's request to stay the decision to force TikTok to divest of its U.S. operations?
Yeah, I think the Supreme Court may decide this for him. I think, we hear oral arguments. I guess they begin January 10th and the deadline's January 19th. I read the appellate court ruling, and it was pretty unambiguous. It has nothing to do with free speech. It has everything to do with national security. And when you read that appellate court ruling, I can't imagine that the Supreme Court would flip that ruling. And I think that President Trump and his team this time got TikTok, let's just say, to play more fair in the election. And I think that is weighing on the thought processes.
Then how do you see that playing out in terms of, a realistic rollout, given how many users there are here in the United States, how many small businesses make their profits on TikTok?
I mean, again, this is a false equivalency. The court ruling happened almost a year ago, and they told TikTok USA. So when you think about TikTok globally, they do about $36 billion in revenue. TikTok USA does about $12 billion in revenue. TikTok USA, I hear their bids out there as high as $50 billion or more for it. So the U.S. court system has said, sell it to a U.S. company for the highest bid, or it's going to be turned off. So if your decision tree matrix was take 50 billion or more or take zero, the only tell in your decision is going to be if the Communist Party of China, who controls ByteDance, who controls TikTok, isn't willing to give up that algorithm that broadcasts directly into 100 million or more households in the United States without the FCC's regulation or without anyone overseeing it. I think the facts are what they are, and I think the decision tree matrix is 50 billion or zero. It's easy to make a decision that's value unlocking and continue this service for the people of the United States.
So given that
China's playing a game of chicken here.
Given that that's your expectation, and you have a pretty clear expectation of how the Supreme Court is going to decide, and you talked about U.S. tech, how does this affect the way you might invest in Meta or Google, or perhaps a Microsoft, which expressed some interest the first time around in buying U.S. TikTok?
Yeah, I mean, look, I don't think it's an either or. I think it already exists today, John. So, when you think about this $12 billion in revenue is already being had by TikTok. Whoever the acquirer is, I think could actually unlock it. Clearly, the state of Texas, the U.S. government, U.S. military, there are plenty of people that are forbidden from using TikTok on any of their government devices because of its national security implications. So I think there are revenues to unlock here with a prospective buyer, and also the leadership in our country deciding to protect U.S. national security. It all makes a lot of sense. It's China the one playing chicken with TikTok.
All right. Kyle Bass from Hayman Capital Management. Good to see you.
Thank you.
Well, one of Boeing's most popular plane models crash landing in South Korea over the weekend, killing nearly everyone on board in one of that nation's worst air disasters in decades. We'll get an update on the investigation. Power Lunch returns.